We're half an hour away from the opening bell, and you almost want to close your eyes going into the session today in Hong Kong, in Shanghai, in Shenzhen. You're watching the China Show. I'm David Ingles. Let's get to your top stories today. Stocks across the Asia-Pacific down after Wall Street's worst day since the August meltdown. Worries about U.S. and Chinese growth fueling this flight to safety and sending commodities tumbling substantially in the early goings of Wednesday. Now, chip makers bearing the brunt of the sell-off in the equity markets after Nvidia's record plunge on fresh worries that the AI frenzy has gone too far. All right, welcome to the program. We'll get you straight to what's happening in these equity markets right now. We're down 2% in the Asia-Pacific, heavy volumes at this point in time. The after-hours move in Nvidia being reflected, as you can see there, in a further 0.5% drop on S&P futures. Taiwan is coming online, more on that in a moment, but as you can see, it's this really broad rush, wholesale de-risking of portfolios, really similar to, eerily enough, almost exactly this time last month. Brent crude, West Texas, iron ore continuing to see some red on your screens. The approach to the Chinese Open today, we're looking at some A50 futures coming online over in Singapore, and here in Hong Kong, we're looking at declines there in the order of about a fifth to 1%. We'll really have a closer look to at least the correlations between this greater Chinese equity market, how they did this time last month amid the sell-off, and might that be any indication of how they might trade, of course, amid what's going on right now. As you can see, some of these contracts are coming online over in Shanghai. We're down 4% on Shanghai crude. Speaking of 4%, 5% drop in TSMC. We're down about 4.5% on the TAIEX index. When the chips fall is our headline today all across the region, from 2 to about 10% over in Japan. Nvidia in after-hours trade. We opened at about 116 in the cash markets. We closed at about 108 amidst all that flurry of headlines which came through, and then we're now trading in the order of about 105 right now. So expect the selling pressure to continue going into the Wednesday session in the U.S. Now, we did hear from the company in response to that DOJ subpoena, and the company says its market dominance stems from the quality of what it does, its products, and that consumers can choose to go wherever they want to go, but they choose what's best for them. Let's bring in Annabelle Jewelers, who's with us right now, tech reporter, fittingly enough on the sidelines of the SEMICON that's taking place in Taiwan. Belle, you've been having really interesting conversations this morning on the back of all this news. Get us up to speed. How's the mood there on the ground?
Yeah, that's right. Well, I hope you're starting to see the venue looking a little bit busier, because 85,000 people are going to be coming through the doors today. SEMICON Taiwan is an event that just continues to grow in size, and it really speaks to the key and pivotal role that Taiwan plays in the global international semiconductor system. Already we've had a couple of discussions, and front and center, of course, is Nvidia. You were mentioning there about that stock sell-off, that concern, the hype around AI has gone too far. But adding to it was what you said after hours there. We had that DOJ, the Bloomberg scoop, subpoenas out to Nvidia, other companies, questioning whether they've had any sort of unfair influence or dominance in the market. Are they basically putting pressure on companies to buy their AI chips, penalizing them if they look elsewhere, making it more difficult for them to look elsewhere as well? So the big question, Nvidia, for its part, as you said, says that the quality of its chips is why customers keep coming back. But something else we'll be discussing this hour. Also talking with IMEC. It's a Belgian research and development facility working on some of the most advanced chip manufacturing in the world. Europe as a bloc really looking to try and tempt places or companies like TSMC to the region there to try and establish the most complicated and complex semiconductors on Earth.
Belle, thank you so much. Annabelle there, our tech reporter in Taiwan for us. On the market angle, Mark Cranfield now joins us out of Singapore. Mark, we're trying to wrap our heads around this almost wholesale de-risking of portfolios, and we haven't even talked about this drop we're seeing in oil prices, 4 or 5%. How are you wrapping your head around what's going on today?
Well, it's certainly easy to see why people are spooked by Nvidia. There was a lot of talk that this capital market cap loss of $279 billion, which beat the previous record by Meta. That seemed to have really upset people. And it's no wonder, because if you look back, when that happened to Meta stock, that was at the beginning of 2022. And after that, both the stock there and the wider market went on a multi-month decline. So it took a long period, well into the second half of the year, before equities recovered in the United States. And obviously, it's a big signal for global equities as well. So people are extrapolating. They think what happened to Nvidia is the start of something really terrible that will take equities on a slide that may last into next year. So clearly, the numbers are huge, but also the longer-term impact is what's worrying people as well. Now, of course, a slightly different situation that the Fed is about to lower interest rates. But now, of course, people are worrying that they're so far behind the curve that 25 basis points won't be enough when they start this month.
Mark, what about this rout in commodity markets? I mean, Goldman slashed their forecast on copper by almost $5,000 to just over 10,000. We know what's been happening with iron ore, 35% down from the peak. Oil prices right now are just being thrown out the window. Can we connect the two, what's going on between in the equity markets and what's going on in commodities?
Well, people are clearly very concerned about global demand for commodities, particularly because of China. They just don't see a fast turnaround in the Chinese economy, who is one of the main drivers for especially demand in copper, but also in oil as well. On the flip side, production levels are still pretty high in places like the United States. There's still output of oil there is still very significant, even more so than the Middle East. So you've got too much oil being put out, not enough buyers for it. And when people think that the turnaround in the Chinese economy isn't going to happen this year, probably well into next year, that's not a great outlook. So obviously people are changing their forecasts. They're reassessing how they view about the global economy. And it may well be that the outlook for the global economy to improve this year is not what investors think. They think it will actually probably be slightly worse than we saw in 2023. And now that needs to be reflected in equity markets, which are doing pretty well on the rebound from August. But obviously September also is notoriously a treacherous month, as it was described on Bloomberg earlier this week. And it could well turn out to be the same again.
Yeah, historically the worst month, at least on the S&P 500 on record. Mark, thank you so much. Mark Cranfield, their size, scope, and context out of Singapore for us. Let's take it back now to the closer look at the Nvidia story and what's happening there. Stephen Dickens, our first guest, is our VP and practice lead at Futurum Group, joining us right now. Stephen, thank you so much for taking the time and obviously coming on very, very last minute. I mean, three words, right? Antitrust, DOJ, subpoena. How real is this risk, you feel?
Well, I think the sector overall is very competitive. We're seeing Intel came out today with Lunar Lake. IBM announced some stuff out at Hot Chips last week. You put the context, yes, Nvidia is the market leader, and they've got north of 90% market share based on our estimates. But this is a market that we're seeing Intel's going to compete in, AMD's going to compete in. I think we're seeing robust markets here, and I still think there's opportunity for expansion from other players. So I think we're at the early stages of the build-out. The top 4 hyperscale cloud providers are still representing most of the market for AI chipsets. But I think that there's a long way to go. I think obviously the news today from the DOJ may have spooked people as they return from the Labor Day weekend. But I think there's a lot to play out in this story. And based on our estimates, we still predict that the GPU market is going to grow by 29.9% CAGR over the next 5 years to a market worth $103 billion. So still lots of growth, still lots of upside in this market based on our research.
Yeah, Stephen, I like how you sort of disentangle the sector from, you know, what is, I think, to your other point, 90% market share, unaffected monopoly. So, you know, the question not so much right now for investors is whether the sector grows, but whether Nvidia can continue to corner this sizable part of the market without getting into trouble. Stephen, I mean, just on Nvidia itself then, I mean, most plausible scenarios at this point, and we don't have all the information, obviously, suggest that either Nvidia has to scale down maybe its market share, or it might need to change the way it conducts its business. Do those two things seem plausible to you?
I think we're going to see normal operation of markets. We see a really competitive market with lots of players starting to come to market. Nvidia's been early. They've built a software stack over and above just the GPU with CUDA. Yes, there's a competitive moat there, but we're starting to see open source. We're starting to see other things come through. I think based on what I'm seeing from Intel and from AMD, they're going to get into this market. Intel's been a little late with Gaudi, but they're coming through. So I think we're going to see the normal operation of markets. What are we, 18 months, 2 years into this market? Yes, we've got a strong player, but I think you're just going to see the normal operation of markets. It's too profitable, it's too big, it's too fast a growing market for competitive forces not to play out. I think if regulators put the thumb on the scales this early, we might see that market not take its natural course.
Yeah, Stephen, that's another good point there. I mean, the statement, the very short statement from Nvidia overnight was, well, I'm paraphrasing, our customers can go wherever they want to go, but they pick the best quality. To the point you just made, when do you think the offering, the product offering, the technology closes between what seems to be number one and, the far second, third, and fourth?
Well, I think we're starting to see different modalities. We're starting to see the hyperscalers bring their own custom silicon. We're starting to see small language models, not just large language models. We're starting to see this market find its natural order. You've got AWS with Inferentia and Trainium. You've got Google with Trillium, what used to be TPU. Microsoft's in this market with Maya. I think you're just seeing the robust growth of a new emerging market that's going to be worth, by our estimates, 103 billion by 2028 for the GPU market alone. So I think, yes, Nvidia were early. Does that mean they've taken a competitive position where the others can't compete? I don't see that at all.
Okay, now, Stephen, how do you think this might affect? And, the DOJ might, at the end of this process, years from now, we might end up looking back and say, oh, the DOJ didn't find anything that sort of merited, any sort of enforcement. But do you think this might change the way Nvidia acts and behaves?
I think Nvidia's got a proven roadmap. They've been very vocal about that. They've had some missteps recently with Blackwell and had to go revisit some of that build out. But I think we're at the early stages of what I'd see as normal market behavior. I think if the DOJ puts its thumb on the scales too early, we might see the market change. I don't see anything from Nvidia that looks to me as not operating in a normal competitive market. I think they're partnering well with the OEMs such as Dell and Lenovo and HPE, but we're also seeing Intel and AMD and others start to partner. We saw Intel ink a deal with IBM Cloud this week around GPU. So we're starting to see the market operate in the way I would expect. There's lots of choices. And I think Nvidia is going to continue to compete in the ethical way it's been competing in the past. Yes, they were early, but I don't see anything wrong with that.
Stephen, you might have seen the news in Oasis looking to get back. I'm using that analogy right now. It's very early days in the story. It's almost like there's a lot of emotions when your favorite brand breaks up, doesn't it? So your final thoughts. We're a couple of hours into this story. Where do you think we'll be in about a week and in a month's time? Final thoughts.
I think obviously headlines have moved the tickers today, and we're early in this story. I think once we get into the market open in the US and we've had maybe 12 hours overnight to process this, things will look slightly different. The DOJ is doing what the DOJ is supposed to do and make sure markets are regulated effectively. But I think when people take a balanced and measured look at this in the morning, they're going to see that this is a competitive market with strong growth. And yes, Nvidia's got strong market share and was early, but we're seeing all the right things from their competitors, Intel, AMD, other players, options from the hyperscalers around their own custom silicon. Heck, even IBM launched its own AI processor and accelerator this week. So we're starting to see that innovation come through, not just from huge names in this space, but also the long tail of other competitors. That's how markets should operate.
Stephen, fantastic insights. Thank you so much for taking the time and to join us, of course, fairly last minute on this breaking news story. Stephen Dickens, their VP and practice lead at Futurum Group. In fact, we got all you guys covered right now. Our guys at BI, our litigation analysts, have put out this note just to react to this. It could take several more years for this to actually play out. To Stephen's point just now, and we're looking at these things being in the early stages. Investigations, information is confidential at this point in time. So it could take some time before this actually runs its course even further. Right, we're looking at a drop in markets right now on the back of this news, of course, plus the broader conversations around where we are with growth and how growth looks in a couple of months from now. Dollar China on your screens. Fix of the day should be coming out very, very soon. Bottom of your screen, 7.1148 against the U.S. dollar. It takes us into the Greater China agenda for today. So we're looking at this drop in metals and iron ore, and also in oil in the last, 12 hours or so, that 4% drop in Brent, further drop right now. We're looking at some of these contracts playing a bit of catch-up, like iron ore, we're down 13 renminbi. HIBOR, by the way, on the Fed conversation, we're now at a one-year low. So good news, at least for mortgage, for people who have a mortgage here in Hong Kong. Not to mention as well, news in Coldplay, but that's a separate good news story. Shanghai Composite, 2,800 level. We took that out yesterday. Do we close above that again today? And, of course, we have a 3-year bond auction to get us through the rest of the session today. Counting down to the open of trade, just 14 minutes away in Shanghai, in Shenzhen, and here in Hong Kong. This is The China Show. Good morning. All right, we're looking at chip stocks down about 5% as a group across the region, resembling, eerily enough, same day, almost this time last month, with that sell-off we're seeing there in that space. Of course, at that point in time, there was this unwinding of the Kerry trade, which to some extent you are seeing some the dollar yen and the strength coming through there. We are on track for a lower open here today in about 10 minutes or so, as you can see by futures on your screens. 7.1145 there against the U.S. dollar is where you are on dollar China. Speaking of China, of course, big conference taking place today in the next few days or so. African leaders are gathered at the capital as the Forum on China-Africa Cooperation begins. It's the first such summit since 2018 and the biggest diplomatic event President Xi Jinping is hosting this year. Our Chief North Asia correspondent, Stephen Ingles, is in fact in Beijing for us to talk us through this. Steve, what's going on?
Well, of course, this has geopolitical significance as well as economic significance for China and Africa. Of course, everyone now is trying to court the so-called non-aligned global south, and many of those African nations are a part of that grouping of the global south, supposedly non-aligned, but obviously holding much more influence as we have war in Ukraine, we have war in the Middle East, you have many different conflicts, and you need, obviously, to have some support if the world is indeed sort of bifurcated between East and West, if you want to call it China and the United States. So it's about winning friends and influence. Obviously, China has been a huge benefactor to the African continent, extending more than $120 billion worth of lending for infrastructure projects from roads, railways, power plants, and winning a lot of influence as well over the last 25 or so years. Since this first China-Africa Forum began in 2000, this is the 9th one. It wasn't held in 2021 because of the pandemic. And the pandemic obviously caused a lot of disruptions in the global economy. Subsequently after that, with the Fed raising interest rates, the strong dollar, many African nations came into deep distress. Zambia defaulted, Ghana defaulted, Ethiopia defaulted. Did these African nations overextend themselves? Well, the argument could be, yes, they did. And did China get burned on its mostly policy bank lending to the African continent? Yes. So that's why many of the deals that are probably going to go forward from now are going to be smaller in size with more transparency and higher return on investment. That's what's going to be the focus here. And probably many more PPP, public-private partnerships. So African nations can still borrow, but it won't necessarily go on the books as sovereign debt. So lots to be discussed as the gala dinner begins tonight. Xi Jinping hosting African leaders from Kenya, Nigeria, South Africa, Ghana, many others will have that dinner tonight, and then the real bilaterals, they've already started. They will continue through the next couple of days here in Beijing.
Steve, that's the agenda. What's your agenda there at the summit? Take us through some of the conversations you have in store for us today.
Yeah, we want to get a sense of the engagement, obviously, with Africa. The United States, obviously, also financing a number of different projects, including a new railway link in the Democratic Republic of Congo. And so there's that battle for influence in the Global South, in particular in Africa. And just what will the new kind of lending to the African continent from China look like as the wallet kind of closes a little bit, as the Chinese economy obviously is suffering. So we're going to have the South African agricultural minister on in the next hour. We're going to talk about how South Africa can narrow the deficit, the trade deficit with China, perhaps by selling more agricultural products to China rather than the other way around. Avocados is going to be the latest product, obviously coming to Asia. So there's a lot to be discussed with many different African nations here. As you rightfully said, Dave, it's going to be the largest diplomatic event that Xi Jinping will host here in China this year, and they put great importance. In fact, the Global Times, the state mouthpiece, 16-page newspaper yesterday, 8 of them, so half of the newspaper dedicated to this summit.
Lots of coverage there. Steve, thank you so much. Our man on the ground at the biggest diplomatic event, of course, in mainland China this year. We'll be on top of all the stories. Stephen Engel in Beijing for us. Approaching the open, 6 minutes away. We are set to extend global losses here in Hong Kong and up in mainland China. Plenty more ahead. We are set to extend losses when things open up here in Hong Kong and up in mainland China. As you can see, we're looking at declines so far, and certainly this is really one part of the risk aversion, the chapter of risk aversion out there, with oil prices falling, West Texas wiping out its gains for the year. We now have a 6 handle, as you can see, bottom of your screens on that. We're coming off the steepest drop in Brent in at least 10 months. So that's really one part of the story. The other part is this broad drop in commodity prices. As you can see, Shanghai crude's playing a bit of a catch-up there. Okay, we have a pound krona cross, just in case you're curious where it goes as well. Going into the open today, we're down about 1% on the Hang Seng Index. We're set to extend the global sell-off here in the Asia-Pacific. Okay, let me just go through some of the things we're tracking in the next, let's say, 15 minutes or so. GDP numbers coming out of Australia. In 15, we get the Taishan numbers, services and composite out of China. We have a bond auction today in mainland China, 3-year bond auction. So that's on the agenda. What's forced itself front of line as far as the story goes, and as you can see on your screens, is something akin to almost this time last month, is near Darwinian scramble for cash, not to the extent that we had back again on August 5th, but certainly in terms of the magnitude, something almost as close to what we saw back then. Now, the lesson, if you think about it, back then, people are kicking themselves for not getting in at that point, because we quickly erased the losses within a couple of days in the equity markets at that point in time. Do we see the same thing this time around? And certainly the complexity of the risks right now, with 3 words: DOJ, subpoena, antitrust, in the world's most loved stock, Nvidia, certainly sending shivers down global markets going into the Wednesday session. Half of 1% to the downside. 2,800 is the level we're tracking on the Shanghai comp. Fresh 6-month lows in both. After we took that out, and that up until recently was the line in the sand that markets were sort of working around. Flip the boards, please, if we can. The open in Hong Kong is slightly deeper as far as losses go compared to what we're seeing onshore. A bit later on, though, we'll show you something that, again, back to that point about a month back or so, how uncorrelated this group of stocks is or are, and might that represent your hedge until we sort of see that most of the evil out of this market being scared away. At the moment, though, correlation is the name of the game, and it's almost a correlation of 1 here, 0.8 of 1%. 10 cents down, 0.6 of 1% as far as that is concerned. A couple of other things here. We're looking at Cathay Pacific. It's no longer a Cathay Pacific story as pertains to the investigation, safety investigations into the engines there. So it's a Cathay story. It's also a Singapore Air story. JAL just put out a statement a couple of minutes back here. Cathay's down about 3%. Sing Air is down about 1.5% over in Singapore. I'll get you those stocks in just a moment here. Energy's also in play. We're down about 4.5% on some of the big energy names in China. And New World is still seeing some declines, not to the extent as yesterday, but still seeing some declines, 0.3 of 1%. Right, at the very heart of the story is chips. And chips in Asia are these names on your screen. Samsung, TSMC, SK Hynix, and some of the other big names listed in Japan. And as a group, we're down about 5%, all things equal. So we're still seeing this. And the pull we're seeing here is the benchmark is down the most since the August 5th meltdown. In fact, let's get almost at the heart of this, location-wise at least, in the Asia-Pacific. That's in Taiwan. You think about Taiwan, you think of chips. SEMICON Taiwan is taking place. Global tech leaders gathering there amidst this fresh plummet in chip stocks, kindling worries, if you will, that AI mania that may have gone too far. Our tech reporter, Belle, is with us in Taipei with her next guest. Belle.
Thanks, Dave. Yeah, what a day to be here for SEMICON Taiwan, heading into another session here. But I'm joined this morning by Luc van den Hove. He is the IMEC president and CEO. And Luc, we can get to IMEC's role in the semiconductor ecosystem in a moment. But I do want to start with Nvidia, because this is really the story, at least, of markets today, and this concern that the AI hype has just gone too far. You work, of course, with a lot of different companies in this ecosystem around the world. What are you seeing about the demand for AI chips in particular?
Well, I think in terms of AI, I consider that we are just at the beginning, basically. Of course, we've had this major burst of attention to AI over the last year, but this is just the start of a trend that is going to last for so many years. We're talking about cloud AI now, building up these capability in the clouds, but we will see a major trend also towards like edge AI, where all our devices will become full of AI. Think about autonomous driving, think about robotics, think about the application of AI in healthcare. So in these kind of domains, things go always with ups and downs, but there's definitely a very long-term trend for massive applications of AI, so I'm not so worried about that.
And so, speaking about long-term trends, IMEC's role as well in the semiconductor ecosystem, you're really trying to build out cutting-edge capabilities.
Mm-hmm. Sure, yeah, that's the role IMEC is trying to play. So we've grown over the 40 years of our existence to become what is probably the world's largest R&D center on semiconductor research and the applications enabled by semiconductors. And so we bring together the entire ecosystem, kind of all the fab companies, and we're here in Taiwan, but also the users, like what we call fabless companies, the companies like Qualcomm, Nvidia, Apple, Google, Microsoft, AMD, but then also all the suppliers. And as the R&D challenges, the innovation challenges in this industry are so big, a single company cannot drive it all. We have to make sure that we align the entire ecosystem around a common roadmap, and that's the role IMEC is trying to play.
You do have those situations where individual companies do control very critical parts of the semiconductor ecosystem, and ASML, of course, is a very good example of that. But what is the work that you're doing with them in particular?
Well, we have been growing up together with ASML. Actually, they also exist for 40 years. They're very close by to where our headquarters is. And so we work with them to develop kind of a new technology. They work on the hardware. We work on the process, on how to use the machine and make sure sure that when they introduce a new technology, that the entire infrastructure, the entire ecosystem is ready to accept such a machine, that the new materials are there, like photosensitive materials, the new mask technology is there, so that those are the plates on which contain actually the chips in a magnified version. So this entire infrastructure needs to be there in time, and there has to be consensus among the industry that the next technology needs to be introduced. And that's the R&D work that we are doing in very close partnership with ASML, but also with the rest of the ecosystem.
ASML, of course, is one of the key companies that at this point is caught in the crosshairs between US and China, and this risk that we're going to see further measures enacted where it will be prevented from not only selling certain equipment, highly sophisticated equipment to mainland China, but also from servicing it, what is already there in place. Can you share any special insights on that?
Well, it is clear that we are living in a world that is changing due to geopolitical tensions, and so the world is changing now. Most of the leading edge technology, leading edge users of the technology are in what we call like-minded countries, and there's a lot of collaboration needed across those countries in order to make sure that the technology can progress.
And that speaks, I guess, to the push that Europe is making in particular to try and build out different aspects of the semiconductor supply chain. What do you make of the efforts so far?
Well, I think that, of course, as during the aftermath of the COVID pandemic, basically everybody started to realize that semiconductors are really an essential asset. The awareness of the strategic importance of semiconductors has grown quite a bit, and this in combination also with the rising geopolitical tensions. As a result, each region has been kind of setting up measures to strengthen its position in the semiconductor value chain, ensure access to leading edge technology, but also strengthen the R&D. There is a potential consequence of that is that each region will try to control to keep everything under control, try to do it all. We believe that semiconductor industry has grown to what it is today thanks to the big collaboration across the world, because the challenges are so big that you need critical mass in order to be leading. And if you want to make sure that we keep a leadership position, especially in the western part of the world, we need to make sure that we connect the strengths. If everybody tries to do everything, it will lead to mediocrity. We need to combine the best of the best in order to make the fastest possible progress. And that's kind of the message we're trying to give. So we should make sure that those initiatives on these CHIPS Acts, that they do not deconnect the world further, but they should reconnect the world. That's very important if we want to keep this momentum going.
In Europe, for instance, you've seen the likes of TSMC breaking ground on its first fab. That fab, though, is focused on semiconductors for the automotive industry, which are, of course, not the most advanced in the chip space. What do you see about the efforts of Europe in particular, but also the US, to attract Taiwanese companies and other major players in Asia to bring their most complex technology to other places?
I think it is important to take efforts to kind of delocalize the critical manufacturing capability, because having everything concentrated on one island is very risky, certainly in the context of geopolitical tensions, but also just taking into account natural disasters. I mean, it poses an important risk. So it is important to make sure that there is a spread of manufacturing capability across the world, and that's why I strongly applaud the efforts from TSMC on setting up fabs across the world. Now, as I said, it's not straightforward to do that, because in order to be excellent, you really need critical mass. And in spite of that, of course, there is this need to also delocalize. And that's why partnering with some of the leaders like TSMC for Europe is very important. Now, when TSMC builds a fab in Europe, I think it's very important to also take the argument to be close to customers, and automotive, of course, is a very strong in Europe. So I understand the choice to first start with those applications for TSMC and get it started and then take the next step. But they have reserved quite a bit of land to further expand in the next phase.
All right, Luc, that was Luc van den Hove there, the IMEC president and CEO Dave. But what a day to be here for SEMICON Taiwan when you've got that huge sell-off in Nvidia overnight, extending into late trade, and then, of course, playing out in the Asian chip makers today.
Well, queen of timing, aren't you? Belle, thank you so much. It's like we planned it. Right. Very quickly, some data coming through out of Australia. So GDP and household spending, nothing much on GDP coming in roughly in line with estimates, whether that's you adjust for seasonality on Q or year on year. You're also getting household spending numbers, which are coming in, at least on a year-on-year basis, lower than estimates, but month-on-month higher than the survey wanted or saw. All that being said, on a day like today, economic data really doesn't matter, to be completely frank. So markets are selling off on the Nvidia and chip story. More on that in a moment. Plus, also coming through here, HSBC and the new boss laying out his plans to keep expenses in check during his first town hall in Hong Kong. Details on the strategy just ahead. This is Bloomberg. All right, on a benchmark basis, we're down about, let's split the difference between the CSI and MSCI China, call it half of 1%. Hang Seng Index is off 1%. Of course, within the Hang Seng Index, there's one big constituent there, which is, well, apart from the tech, of course, HSBC. Shares coming up on your screens very shortly. There's a new boss in town, quite literally. The new CEO, of course, conducted his first town hall in front of his audience and his army, and the marching orders are what is the key question. Let's put that question to our finance reporter, Denise Wee, who's here to tell us more about the CEO's message to his staff.
I think one of his key messages is that the current strategy is working, so keep doing what you're doing. And then there was a message around continued cost discipline. It wasn't a super aggressive message, but it was more, spend wisely, not necessarily spend less, but, keep an eye on costs. And that's something we've definitely seen with the bank. Sort of keeping a lid on expenses, hiring a bit more slowly, encouraging bankers to spend more judiciously when it comes to travel and expenses. So generally it's a positive message. He's in town. This is his first meeting. He's meeting clients, meeting regulators, going to branch visits, talking to staff. So it's more of a softer entry.
Okay.
No great revelations.
Okay, so for Mr. Elhedery, what are the biggest challenges then, looking ahead?
I think for him, the main challenge is interest rates are coming down. Central banks are poised to cut rates.
Right.
So it's going to be a lot tougher for HSBC. They've been riding this huge rate hike, which has been great for their margins. They posted record profits. So now they're facing this environment where it's going to be tougher for revenues, a tougher environment generally.
He speaks Mandarin, right? Does he?
Yeah, he speaks. He took a sabbatical in 2022, a six-month sabbatical to learn Mandarin, spending time. Yeah. And it's been unusual that he came back to become CEO of the bank, because my sabbaticals are sometimes the way out.
Right.
But yes, he came back, and interestingly, during the meeting, the staff meeting, he said he spends 1.5 hours every week learning Mandarin, and it's kind of a sacred thing. He's dedicated to it.
Okay, Denise, fantastic reporting there. Denise Wee, of course, on HSBC, our finance reporter there. Okay, we have some data coming through right now out of China, the Caixin numbers, services, and composite. Services, let's start with that. So a decline from the previous month. So from the July reading of 52.1, we're now down to 51.6 on services, unchanged as far as the composite goes at 51.2. Dollar China a little bit lower right now after quite a melt-up, of course, yesterday, given the sort of move down in EMFX and the broader sort of risk aversion we're going into and still feeling, by the way, in this part of the world at this point in time. Okay, from macro back to the micro here. So let's talk about BYD. So sources say the company will not announce a major plant investment in Mexico until at least after the upcoming U.S. elections. That certainly comes as the firm takes a wait-and-see approach amid the shifting policy in America. Let's bring in Dan Lee, our EV supply chain and reporter, to talk us through this. So elections, we've been talking about the risk there, and it seems to be showing up in the company's plans.
Yeah, and it's now another company joining this, and a big one in BYD. The US elections doesn't directly impact them in as much as they're not entering the US market, but Mexico, given its trade flows and connectivity with the US, for example, it's going to have to take a wait-and-see approach in which of Kamala Harris or Donald Trump enters office, because they both have very hawkish policies or very divergent policies policies, and whichever one enters office will clearly be more significant for it's going to be a big investment in Mexico. Mexico is a very important market to them, and so it needs to get it right. So at least until November, before they can decide how they make their next step approach, and they were still expecting to make a decision by the end of the year, but for now they have stopped actively looking for a factory or a site in Mexico in the meantime.
And this doesn't just affect BYD, right? A company like Tesla, for example, and has broader consequences for the wider industry too.
Right, and Tesla has already come out and said, its investment over a multi-year period in relation to EVs. Mexico is very important to Tesla because of the opportunities of exporting lower-cost EVs into America. So Elon Musk has been very upfront about this, that they're going to be more cautious and wait until the outcome of the U.S. election result. But then you've seen this huge shift from China. There is an extended supply chain, frankly, moving into Mexico because of what BYD, Tesla, even CATL are doing just south of the U.S. border, frankly. And so the consequences of whoever enters office clearly that could have a huge impact on all that investment, the billions that have gone into Mexico so far, and the potential promise for how these companies are going to spread through the North American market.
Danny, thank you. Danny Lee there, our EV supply chain reporter on the latest on BYD. They're choosing to wait a little bit further, probably not a bad idea given the uncertainty out there. There's plenty more ahead here in shows. We'll leave you with a look at these messy markets. So when I say messy, think about that inebriated friend of yours at 3 a.m. with a kebab in his hand. There we go. The sorry state of markets this Wednesday. This is Bloomberg. Welcome back. Look at some top global headlines that we're tracking right now. So Russia and Mongolia have agreed to strengthen economic ties as Vladimir Putin wraps up his trip and his visit in defiance of an international criminal court arrest warrant. Now, the two countries signed agreements covering energy, trade, and transport. ICC member Mongolia has faced criticism for failing to enforce the arrest warrant for Putin over alleged war crimes in Ukraine. Now, the field of contenders to become Japan's next prime minister has widened to 4, with Chief Cabinet Secretary Yoshimasa Hayashi joining the race. Hayashi says he'll pursue people-friendly politics if he wins the votes on the party vote, to be more specific, on September 27. Now, the next LDP leader is all but assured of becoming prime minister due to its dominance in parliament. Now, a former top aide to New York Governors Kathy Hochul and Andrew Cuomo has been arrested on federal charges of acting as a foreign agent for China in exchange for millions of dollars. The indictment names Linda's son and her husband, Chris Hu, who is accused of money laundering. Now, the U.S. alleges Sun acted on behalf of China, blocking Taiwanese representatives from state access. Now, it's time for our China Brief, and we're looking at, of course, the biggest diplomatic event of the year hosted by President Xi Jinping in Beijing. That's the Forum on China-Africa Cooperation, and where he's hosting, of course, dozens of African leaders. Our China correspondent Min Min Lo is here with us to tell us really how the event is being covered across Chinese media.
Yeah, Chinese state media has given a lot of space to this event. If you look at China Daily, Global Times, the Chinese papers, plenty of articles just celebrating China-African cooperation over the years. And if you look at the People's Daily, the Communist Party mouthpiece, you can never have enough of the photos of President Xi on the front pages. Today, there were 4 photos of President Xi. We can show that front page. There are 4 photos of him meeting with African leaders from Malawi, Chad, Mauritania, for instance. And this is really China's way of showing the world that, they are holding high the banner of multilateralism, as Chinese state media likes to say. And we have Global Times publishing an editorial saying that Chinese support, we can show the quote on the screen, please. Chinese support for Africa comes in very tangible and practical forms, unlike Western nations nations that often just give lectures of Western concepts of democracy and human rights. And look, Africa as a continent offers a huge market for Chinese companies at a time when Western nations are slapping all these tariffs on Chinese goods. The Global Times saying that now made in China electric motorcycles are now on the roads of Africa. It's something that's estimated to be worth about $5 billion by 2027. So China is pumping lots of money, investments into the country in exchange for minerals, oil, resources, and also sometimes support from these African nations when it comes to China's stance on divisive geopolitical issues.
Yeah, closer economic ties certainly is reality. Min, thank you so much. Min Lo, a China correspondent there. In fact, in the next hour, we'll continue the conversation here. And just a piece of trivia for you guys while you look at this. So we had a look at the 10 biggest economies in Africa. China was the #1 trading partner of 6 of the 10, and in the top 3 of the remaining 4. The South African Agriculture Minister will be joining us at those times on your screens in about 15 minutes from now. Right, just back to markets very quickly where we are. And I guess a reminder of almost this time last month when we had that sort of rout in markets. And at that point in time, obviously we know this is hindsight, but in hindsight, when you look back at then, China actually provided a pocket of protection over several days while that took place. MSCI China outperformed the broader benchmark. In case you're wondering, though, when you look at the Nikkei 225, which was at the center of that rout, it took about 8 days before the index reversed completely the losses from August 5th. So it didn't take long. Do you buy this dip? I'll leave it up to you. It's quite a bit that we're seeing today on your screens, 1.5%. Volumes are substantially heavy. TAIEX index, 3.5% for that. Nikkei 225, the Korea is off by 2.2%. This is Bloomberg. Right, welcome. You're watching the second hour of the China Show. Live pictures, of course, of the harbor here in Hong Kong, where if you're in the city, you're probably cursing yourself for taking that extended walk. It's extremely hot. It's extremely humid. There is a typhoon, of course, nearby. I believe we're under a T1 storm signal warning over this. It could go up to T3, in fact, based on what officials have told us early this morning. Later in the afternoon, but apart from the storm perhaps brewing quite literally just nearby here, there's a storm in markets right now. Not to the extent of that, what was a Darwinian cash grab about a month back, but certainly still something to grab your attention, if you will. So Asia Pacific, we're off by about 2%, heavy volumes. A lot of this is in tech, and a lot of the sort of tech-heavy benchmarks where you have big chip representation like the Kospi, as you can see, 2.2. TAIEX is off by, is that 3.5%? 3.5%. Yeah, that's a TSMC story. Should be coming up on your screens at some point over the next 10 minutes or so. Other pieces of news that come out. So we had the Taishan numbers coming out of China, mostly showing an okay set of numbers. GDP coming out of Australia. What was that? In line with estimates, but the household spending came in slightly below on year-on-year, but slightly above on month-on-month. Nvidia, after-hours trade, 105. So we went from 116 at the open to about 108 by the close. And then somewhere in between, we had the DOJ headlines. You put DOJ, subpoena, antitrust in one sentence, and then you throw in perhaps the world's most covered stock. And then this is what you get, right, on your screens. 4% on TSMC. We're down about 6 or 7 on some of these big names over in Japan. Right, so on a percentage basis, it was about 8 or 9%, but certainly it's a very big company. So on a market cap basis, it was actually the biggest blowout on record. And as you can see, the sort of the top 5 that populate this list, a lot of them are, well, you know, your Mag 7 because of how large these companies are. But the one overnight was a 280 billion wipeout of Nvidia. And it certainly begs the question is, has the AI trade gone, well, too far, and has the AI sector gone too well that it's caught the attention of regulators? Now, we asked some of these questions to our earlier guest, Stephen Dickens of the Futurum Group, for his view on where the story goes from here. Have a listen.
I think you're just seeing the robust growth of a new emerging market that's going to be worth, by our estimates, 103 billion by 2028 for the GPU market alone. So I think, yes, Nvidia were early. Does that mean they've taken a competitive position where the others can't compete? I don't see that at all.
Joining us today here in set and gracing us with his presence here in the city, Kerry Craig, usually based out of Hong Kong, here with us on set, global market strategist at JPMorgan Asset Management. It's nice to see you. Good morning.
Good morning, David.
Well, what a day for you to come. What do you make of what's going on so far?
Well, I mean, it's a confluence of factors that are really causing the sell-off today. It's obviously been the story around potential antitrust on the tech side. We've obviously seen some weakness in some of the economic data that came out of the US, and this all leading into what was already a very nervy week for markets, given we were looking towards the labour market report in the US this week and potentially what the Fed was going to do. So those sort of growth concerns related to some of the concentration risk we've already seen in the market has just, again, created this spike in volatility, which is not quite as bad as it was back in August, but again, just illustrates, I think, the markets are a little bit apprehensive around the direction of both markets and the global economy at this point.
How do I look at the long AI trade right now specifically?
I think there's still a lot behind it in terms of the secular theme that it represents, but it is a market that has been driven very heavily by just a few names. I think there's important takeaways in terms of what we're seeing on the earnings side for some of these companies that largely are being delivered in terms of that, and that really is sort of helping the view around the valuations, even though they have gone up a little bit of way. There's a broader concern around, there's obviously the need for the supply, but is there demand on the other side, and really how much are you seeing this feed through in terms of the broader market and the use of AI and this technology for the broader market and thinking about the economic consequences. So it may take a little bit longer for that to really be evident, but we do believe that's going to theme that's going to present itself over the next few years and does justify thinking about this AI theme within your portfolio or even thinking about it within the markets at the moment.
Right. I think one of your colleagues said exactly that you know, it's early, we don't know a lot of information just yet, but this doesn't seem to be anything like the bubble bursting back 24 years ago, does it?
No, we had virtually no earnings on those companies when back in 2000 when that rolled over. The valuations were much more extreme on many metrics, and a lot of it was on hope rather than what was actually being delivered, whereas now you actually have tangibles coming through, and I think that is a reassuring part around what we are seeing in the tech names in the US.
Okay. What else is dominating conversations with clients these days, apart from obviously this?
Obviously, the big view around, soft landing, recession, the labour market, and where we're heading with the Fed, whether we get that big number that says the Fed is more worried about growth than perhaps they're letting on, and if you see a bigger rate cut come through in September, obviously the data that's come out of the US this week is still relatively soft, and I think that there's this effect that if it is a bit softer, if the Fed does say they're going to move by more or even think about penciling in further easing this year, I mean, it does send a bit of a negative signal to the market around the chances of recession. I mean, that's not our view. We do think, 25 basis points makes sense in September from the Fed. We could see that expanded if you do get a soft labour market report this week. But again, it's that signalling effect of an economy which is still doing very well in the US. If you think about just a roundabout trend, inflation that is very much coming back towards their target, and what does feel like a soft landing and an extension of the economic cycle in the US.
Has the Treasury rally gone too quickly, though? In other words, I'm trying to ask you, how do I think about duration at this point? At this point in the rally, to be more specific.
I mean, you've gone from 4.5 on a 10-year this year back down to 380. Got a little bit lower than that at some point. That sort of 3.85 to 4% range is something that we could think could be palatable at the moment. We do know those yields come down when the rate cutting cycle starts, and that's what we expected. Obviously, the market has priced a little bit of that ahead of time at the moment, but we would expect yields to fall from here. We think it's a very asymmetric profile around the path for Treasury yields, and that if you have been underweight duration in a portfolio, now is the time to start extending it. We wouldn't be going out well along. Well, we wouldn't go further out the curve, given that we do have still a flat to inverted yield curve in the US. We're thinking about the belly, so 5 to 7 years, which brings you roughly in line with the duration on something like the global ag. But you can look around the world and see opportunities within Europe or UK where the yield curve is a different shape. You can see a different policy path easing from the central banks in Europe or the Bank of England, which may not be as aggressive. And so you are getting the opportunity to lock in those yields without some of the concerns around the yields rising in those places relative to what we may see in the US.
Do I stay in rates, or do I have some business going into credit, IG, high yield, where things have tightened substantially?
Yeah, I mean, those spreads are narrow, but they can stay narrow. If there's low volatility in terms of thinking about those spreads, and there has been back in 94, 95, we go back to that soft landing period, then those can be persistently tight. You still pick up that coupon and that carry. We don't think about, a huge capital appreciation from further spread tightening in that environment, but nor do we think about a massive need for spread widening, particularly in investment grade. And if you do see the yields come down on those core government bonds, some of the yields in the investment grade space become a little bit more appealing to generate a bit more of that income. And then on the high yield space, again, without a big recession, it is really driven by the cycle. You can see those spreads remain relatively narrow, even if you do see defaults pick up a little bit. We're not going back to those big defaults unless you do get a more substantial downturn in the economic cycle, and that's not really our base case at the moment.
I also want to ask you about this cash. Up until this, we were always thinking, money was going into cash strategies. It still is, and I'm wondering why you think that still is. Money market funds are still inhaling tons of assets at this point in time. And, the Fed cutting cycle is clearly visible at this point in time. Are you puzzled? Are you having to push back at preferences for cash?
It might be a case of, once bitten, twice shy when it comes to the outlook for duration. Obviously, there's been calls around bonds being back for a while now. Yeah. We saw yields rise. Investors looking at cash and saying, well, I'm getting a very decent income and sitting in a...
still inverted to your point earlier on.
Yeah, decent yield sitting in a money market fund in the US. There is a lot of cash there. But, as the banks look forward and they look at those rate cutting cycles coming through, they're going to start to reprice what they think should be offered on those money market funds. You'll see that come down, and that attractiveness of holding cash relative to fixed income is definitely going to shift the other way. And again, just go back through any rate cutting cycle in the US history. Bonds typically outperform cash because you do get that drawdown in yield, you get that appreciation in the capital side, and that'll be the same this time around. And more importantly, as we've seen inflation come out of the picture, that's not the dominating driver of the bond market. It's going to be that growth outlook, and we can start thinking about that correlation between stocks and bonds being something a little bit more beneficial for portfolios, rather than being something that's been a headwind as it was back in 2022.
Yeah, that was a problem, wasn't it? 2 years back. Speaking of, we haven't really gotten into the equity part of the conversation yet. I mean, this week could be the buying opportunity. Some people might choose to wait a little bit further. What's the appropriate equity exposure at this point?
We're still pretty pro-risk. We think there's a good case for thinking around an economy that's expanding around the world. Valuations, if you look at the S&P 500 on the top line index level, it is looking a bit toppy. Obviously, some of those is related to what we're seeing in the mega tech names. But we are seeing a broadening out in that earnings picture across the rest of the market. It's been a little bit slower to come than we had anticipated, but you are seeing it definitely being penciled in when we start to look at the fourth quarter of this year and into 2025. So again, there's an economy that's continued to expand at a relatively trend-like path. You are going to get the benefit from rates coming down. You are still seeing the benefit to consumers from sort of positive real wage growth, and that will feed through into the rest of the economy. It is a market, though, you definitely want to focus on quality in this environment. We probably want to be a little bit defensive as well in terms of thinking about the sectors that can do well in this environment, and wouldn't lean fully into the sectors that are cyclical, given the slowdown in the economy. But we still see a broad case for thinking about an extension in the US of the economic cycle, and that's still beneficial for thinking about equities in this market. But again, if you want to have that risk in equities, you want to make sure you have that balance. So thinking a little bit more of a ballast from coming through from the fixed income side, maybe away from cash in that regard as well.
Okay. So you brought two interesting concepts, quality and defensive, which if we had this conversation 12 months back, that meant large cap tech. What do those two things mean at this point? Is that still large cap tech, or is that something else?
Quality does buy itself towards large cap in the US. Right. I mean, the higher ROE, higher ROA, these are the things that you really want to look for. They have those sort of cash flows that are going to be more persistent, deliver on those earnings. And so there is a large cap bias to that. It's definitely not in the small cap space where we do see some issues coming through. But I think even within the S&P 500, you can start to look at other sectors. I mean, think about the performance of the healthcare sector. That's something that's going to come back up. When we think about the performance of the more defensive side, we could look towards more around the industrials part of the industrial sector as well to see the performance of that, and even consumer staples to a certain degree, given some of the consumption behaviour that's shifting in the US. So there's definitely opportunities within that. But again, with all of those sectors, you still want to be focusing on the companies that have the ability to protect those margins, have that market share, as we do see those top line revenue growth coming down a little bit to really feed through into putting that earnings in the pocket of investors.
Equity markets in this part of the world, so whether that's Japan that's done well, not so much recently, India that's still doing well, China that hasn't done well for for many years. What's the advice?
We're still looking very favourably towards Japan at the moment. I mean, we did have that sell-off. The carry trade is, again, another reason the markets are being a little bit nervy today, thinking about whether it's going to go through another unwind.
Yeah.
We see a lot of that risk have coming out over the last few weeks, and so we're still very favourable on Japan, given the fundamental drivers of why we saw the economy shifting, of why we saw the market shifting around corporate governance still being very much there. And then on the rest of the Asian markets, again, leading a little bit away from China, more into the North Asian markets of Taiwan and Korea, where we could see opportunities. The manufacturing data coming out of those parts of the world is still pretty positive relative to what we're seeing elsewhere. And again, we are still thinking about that good cycle around the world still being beneficial for the supply chains in that part of the market.
Final question, since you mentioned Japan, one view that's come up recently, minority view, it's not consensus so far, that this long Japan trade is a purely currency, a function of the currency. Would you subscribe to that, or is that something that's a bit too extreme?
No, there's much more to it than that. Obviously, You've seen the economy start to reflate. You've seen weakness in the domestic growth side of things, but that's starting to turn around. You've got wage growth that's moving in the right direction. So there is definitely a structural shift in the economy. And then again, the corporate governance side of things, the improvement you're seeing there, it has been relatively slow, but we're still seeing good buybacks come through. It's not just about the currency and the export nature of the economy. It is a highly cyclical market, so maybe there's some concerns around a broader growth slowdown around the world, but it is very much a market that's on the change in terms of where we see the outlook. It has had some very solid performance in the past, but we think that's going to continue. And the valuations aren't really challenging when we look at the Japanese market at all.
Kerry, fantastic to see you, by the way, in person. Hit us up next time you're in town. Kerry Craig there, of course, global market strategist at JPMorgan Asset Management. Right just ahead here in shows, we'll be speaking with a South African agriculture minister about why he thinks his country has a skewed trading relationship with China. And skewed, is that a negative or is it a positive spin? More on that story just ahead. This is Bloomberg. Welcome back. So amidst this market rout I think within this cross asset is obviously a drop in equity markets, a rally in fixed income treasuries, a drop, as you can see, in commodity prices. So you have Brent and West Texas effectively trading about 4 or 5% lower than this time yesterday. We're certainly seeing catch up in the Shanghai contract, which is down about 4.5 last I checked. Apart from this, you have a copper story where Goldman had a look at the outlook and the demand curve, and effectively said, let's hit the pause button on the tactical long rally there. There's a China-specific story in zinc, and iron ore obviously is also a China story. We're down about 35% on iron ore prices from the peak just this year alone. Some of the contracts, of course, in Shanghai and Dalian on your screens. Let's bring in our reporter out of Shanghai, Martin Ritchie, of course, our Bloomberg Commodities reporter joining us there out of Shanghai. Martin, let's start with copper. And what did Goldman say, and why did they do it?
Yeah, it's a fairly stark demonstration of the mood change, actually, in commodities markets. Goldman Sachs, the analysts there, have for a long time been a big cheerleader for this kind of very bullish copper story that has been trotted out over the past few years. That was predicated on deepening deficits, a shortage of copper because of all this demand coming from renewables. But China has sort of got in the way, and Goldman took $5,000 off its 2025 forecast for next year, which is really a pretty spectacular U-turn for any analyst house to make. It's putting down from 15,000 for next year to 10,000. And they said that simply those deficits that were expected will be delayed because of China's economy, because of the slowdown in the property market, because of uncertainty over growth here. You're just not going to see that same level of demand.
Okay, well, somewhat related maybe, but certainly not everything, is what's happening in zinc. I think that's probably more the metal story and where you are with smelter fees and losses. What's going on exactly there in China, specifically with zinc, Martin?
I mean, as you said, these things are all related. You know, in zinc, what you've got is a situation where the zinc producers, the smelters in China, they're actually losing a lot of money. They're unprofitable because there's not enough raw material around to support their production. So they're squeezed from that side, but then demand on the other side is also fading. So they're under pressure to cut production in the same way, perhaps, that the steel producers are as well. They're suffering losses again because demand is so weak, because the steel prices have fallen. And that, as we're seeing, I know you wanted to ask about iron ore as well. It feeds into that. Iron ore has come down. We're now on the watch for $90 a ton after a brief rebound last week. So all of these things, copper, zinc, and steel and iron ore, are fairly related. They're all tied up into China's demand slowdown, I would say.
Martin Ritchie there, our Bloomberg commodities reporter on all things, what's that genre? Heavy metal, as far as prices go. Right. Let's have a look at some of the other movers, of course, later on. Things like transport, for example. You have Cathay Pacific and the like, and Singapore Air is also seeing some pressure right now. So more look at some of these pockets of pain in these equity markets this Wednesday. Plenty more ahead. Okay, welcome back. You're watching the China show. So, the big story, of course, that we're continuing to track is what's been taking place, of course, with, it was first Cathay Pacific and, their own Airbus A350 fleet, and now it's come in and sort of engulfed more airlines into the story right now. So it's not just Cathay, it's JAL, it's Singapore Air China have all been, of course, among some of these airlines undertaking other safety checks. Danny Lee, our aviation reporter, is here with us on set to just get us up to speed and how the story has evolved the last 24 hours.
Yeah, so Cathay has found 15 aircraft which needs components replaced, this one component replaced in its A350 engines, and so that's underway. I know 3 have so far been fixed and up flying again. Cathay do expect, though, all of its aircraft to be back flying, the 350 fleet to be flying again by Saturday. Okay. But clearly short-term disruption from the checks it's made. And the worry that it had spread to the other airlines, the other operators, when it started sharing some of the information around with some of its nearby airlines, particularly Japan Airlines, spoke with Cathay. They said that they're going to be checking their 350-1000 fleet. Singapore Airlines, the biggest operator globally, said it's going to be checking. So clearly the industry has been paying attention to what Cathay has been doing from what is now concluded to be more of a minor issue that investors can largely be more relaxed about. But if you're someone who's invested in Rolls-Royce, that still hasn't erased the £2 billion in pounds in losses that it got hit with when the news first came out a couple of days ago.
Have the other airlines found anything?
So far, no. JAL has actually said that of the 3 aircraft it's checked so far, Japan Airlines, it's found no issues, and 2 more will be checked once it comes back to its base in Tokyo. We're waiting to hear more from Singapore Airlines and obviously from looking at the Chinese carriers, the mainland Chinese carriers such as Air China, if they find anything. But so far, across the airlines who are checking, which is a limited number, so far nothing, which is broadly a good thing, I'd say.
Well, yeah, net certainly a good thing on aggregate, in fact. Danny, thank you so much. Danny Lee there, of course, with the latest here on the airline story. Right, just very quickly here, back, from up in the air, back here on the ground or under water. Semiconductors down about 5% on the broader Asia benchmark, Asia's semiconductor index. TSMC is still feeling the pinch. I think the silver lining really here is we haven't seen an acceleration in losses. In fact, for many of these names, we've started to come of lows of the day. In some cases, like Japan, where you have Disco, Advantest, we were down as much as, 8, 9, 10%. So we're coming off lows a little bit. Still, of course, we do have to adjust lower, given what was the steepest drop on the SOX index, SOX, since March of 2020. So if many of you recall what happened back then was when the global pandemic hit and effectively closed shut many parts of the global economy. Very, very quickly here. So we're looking at energy, we're looking at mining stocks. On the back of the previous segment, we talked about the drop in metals, this ongoing drop in oil prices. West Texas has now completely reversed all the gains we've seen so far this year. We now have a 6 handle on the most active contract in West Texas, and we're seeing some of the energy names on your screens. And plus, of course, where you are on things like gold. Zijin Mining down about 5.8%. And very quickly, on this note, if you're wondering where we are on the most active contracts, oil and other commodities coming up on your screens very, very shortly. There we go, on your screens. Yep, 69.83 right now in West Texas. Shanghai crude is playing some catch down about 5%. That's 522 RMB there, a barrel. And iron ore is also trading. There we go. Sub 700 a metric ton. Right, going into the Tokyo lunch break, that's really where I think in many ways you're seeing ground zero in the equity market, and that market actually opened up almost 1,000 points lower, then eclipsed 1,000 points, and has since pulled back. So more on the market rundown and what's taking place right now. We're coming off lows of the day, which is a good thing if you're just joining us right now. Plenty more ahead. Okay, we're going into the Tokyo lunch break. I was hoping to not be the bearer of bad news, so I'm going to, a moment of silence. Down the most, it's August 5. There we go. 200 stocks under Nikkei 225 are down today. It's not as bad as August 5th, which was the sort of ground zero to Kerry trade on one. In fact, this time yesterday, a bit of inside baseball in the newsroom. So as we were wrapping up and trying to predict, and by the way, this time yesterday was extremely quiet in market. We were trying to predict in our daily editorial meeting what would take place today, and a line drop in the terminal from the BOJ governor talking about how they might hike interest rates if the data warrants it. And we were reminded of that day this time last month where we almost saw similar losses, worse than today, of course, but you know how things quickly come back full circle. Speaking of full circle here, so in case you're wondering, if you bought the dip on August 5th, it took you 8 days to make all your money back. So if you're thinking about doing that, I'm not sure that helps 8 days. Certainly there are differences. And of course, we are going into September, which is seasonally not the best month. And there's a jobs report, and there's this Nvidia story, of course, which is, I guess, taking you through a different vector of the risks, the risk profile that, I guess, should we start discounting that into future cash flows? Will that have an impact as far as how the company conducts its business? Or is this really, I guess in many ways, a sign of confirmation that the AI story has actually done very well, in fact, maybe too well, that it's got the attention of regulators. In any case, of course, markets have to pare back some of the froth, right? More on this Nvidia story. So the company says its market dominance stems from the quality of its products, and that consumers can actually choose whichever brand works for them. That's after Bloomberg revealed that it's been sent subpoenas, the company, by the U.S. Justice Department as part of these antitrust investigations. And the DOJ is seeking evidence, of course, that the chip maker violated antitrust laws. Let's bring in our team. Out of Tokyo is our Asia Tech Executive Editor, Peter Elstrom. And out of Taiwan at the SEMICON event is Annabelle Jewellers, of course, our tech reporter. Peter, I'll start with you. For those just hearing about this for the first time, what is the motivation for this DOJ investigation?
Yeah, so what's going on here is that Nvidia holds really a dominant position in the AI chips that are used to train the models that we hear so much about, ChatGPT from OpenAI, as well as the models from Microsoft and Google and some of the other competitors. They have about 90%, more than 90% share really in that market. The Department of Justice has been investigating this and whether there are antitrust concerns around how Nvidia is handling itself within this market with that kind of dominant market share. In particular, the latest news that our sources are telling us is that the DOJ is now sending out subpoenas. Those are legally binding documents requiring customers and other people to respond to their requests for information. They're trying to figure out whether NVIDIA is treating certain customers better than others as it's trying to solidify its position in this market. In particular, is it treating customers better if they give more business to NVIDIA, if they buy higher margin products from NVIDIA, and also is NVIDIA making it more challenging for some of these customers to switch products if there are some alternatives down the line that would give them some options in this AI market that NVIDIA now so solidly dominates.
Bell, if I could bring you in, and what a time for you to be there on the ground at the conference. How is the conversation playing out there?
Yeah, well, to your point there, and Peter's as well, of course, around the concerns with Nvidia, not just, of course, these antitrust concerns, but the concerns around whether that AI hype has gone too far. It's certainly one of the major talking points at the SEMICON conference here in Taipei. I mean, you can see behind me it's getting pretty busy, but 85,000 people are expected to go through the doors today. Really, though, in the conversations I've had with people this morning, the key theme that's coming across is that we're just in the first innings here of the AI boom. There's a lot more still to go. I spoke earlier with the president and CEO of IMEC. It's the largest R&D research facility in the world for semiconductors specifically. Here's what he told me.
This is just the start of a trend that is going to last for so many years. We're talking about cloud AI now, building up this capability in the clouds, but we will see a major trend also towards like edge AI, where all our devices will become full of AI. Think about autonomous driving, think about robotics, think about the application of AI in healthcare. So in these kind of domains, things go always with ups and downs, but there's definitely a very long-term trend for massive applications of AI, so I'm not so worried about that.
Shift that IMEC just mentioned there toward the edge, so-called on-device AI. This is something else I've been speaking with UBS about, but essentially it refers to artificial intelligence processes running locally on a device. It means that you don't need a server or a cloud connection. This is seen as perhaps another leg that could come in the demand for AI generally. AI services, of course, we're talking about a $100 billion market for revenue in the course of 2024, but you look at the market for smartphones, PCs, it's much bigger than that. So Dave, again, AI hype, seems like there could be more room to run.
Yeah, Peter, I think there's no better example of a story that has such a serious short-term and longer-term component than maybe this. How serious does this look for the company right now?
Well, at this point, the Department of Justice is just beginning its investigation. When you look at how the DOJ has handled similar probes in the past, they tend to move pretty slowly. In the United States, the tech giants have been given a lot of leeway to kind of jump into markets, dominate markets in different ways. We saw probably the last big precedent was the Department of Justice's investigation into Microsoft and how it used its Windows operating software and other software to kind of dominate the personal computer market. In this case, NVIDIA has jumped to dominance in AI so quickly that we really don't have a precedent for how this is going to be handled with them. I think the Department of Justice tends to err on the side of allowing an innovation, allowing the market to kind of take its course, but now it's beginning to check as this market grows so much, as it's costing customers so much money, to see whether there are some behaviors that NVIDIA is committing that could be of concern to the antitrust regulators, and whether in fact it needs to modify that behavior down the line.
Yeah, Peter, to your point that you just made, our colleagues at Bloomberg Intelligence, our litigation analyst, put out an immediate and very impressive note about 90 minutes back, and I'll just read part of that just so our viewers can see it too, that the likely fallout is years away. We're in the early stages of this, and investigations are confidential, usually take years to run their course, and events could actually alter substantially the outcomes looking forward. So it's early in the ballgame here. Bell, let me bring you back in just for some final thoughts. What else is being covered at the conference? I guess it's my way of asking what would have been covered were it not for this story that suddenly forced itself right now at the very front of the news flow.
Well, I think to that point that you're making there around the early innings, I mean, it's something else, of course, that's playing into a lot of conversations, but overlaying that is geopolitics, of course, a key question here as well. You think about a semiconductor, and from the time that it's conceived or designed to the time that it's ready, it's traveled up to 40,000 miles. That's nearly 50,000 kilometers. And you're traversing dozens of different countries, different companies in the process. So there's clearly a lot of points in that supply chain where it can come unstuck. And geopolitics, the tensions between the US and China, again, has been factoring into this. It also factors into the conversation that we're having around how much Taiwanese companies are being incentivized to move their operations away from their home bases. And we have seen, of course, lots of different companies exploring different facilities. Again, speaking with IMEC, I asked about the TSMC factory that just broke ground in Dresden in Germany. This is one that's more focused on the automotive sector in particular. It's not the most advanced manufacturing that we've got for the company. But again, the IMEC president and CEO is saying that this is just the beginning. They will eventually shift more complex productions offshore as well.
Guys, thank you so much, team. Fantastic stuff there as we cover most and hopefully all the angles to the story at this point in time. Peter Elstrom in Tokyo for us and Annabelle Jewelers in Taipei. In other news that we're tracking this morning here, the fields of contenders, speaking of Japan here in politics here, to become the next prime minister has widened now to 4, with the chief cabinet secretary Yoshimasa Hayashi joining the race now. He'll be, of course, he says that he'll pursue people-friendly politics if he does win, of course, the party vote on September 27. Now, the next LDP leader is all but assured of becoming the prime minister due to its dominance in parliament. Now, Russia and Mongolia have agreed to strengthen economic ties as Vladimir Putin wrapped up his visit in defiance of an international criminal court and an arrest warrant there. The two countries signed agreements covering energy, transport, and trade. ICC member Mongolia has faced criticism for failing to enforce the arrest warrant for Putin over alleged war crimes in Ukraine. Now, a former top aide to New York governors Kathy Hochul and Andrew Cuomo has been arrested on federal charges of acting as a foreign agent for China in exchange for millions of dollars. The indictment names Linda Sun, or Sun, and her husband Chris Hu, who is accused of money laundering. Now, the U.S. alleges Sun acted on behalf of China, blocking Taiwanese representatives from state access. Right, that's a wrap of the top stories right now. Plenty more ahead here on the China Show. Look at markets this Wednesday morning. We're down a lot, but we're coming off lows of the day. It's a silver lining. This is Bloomberg. Right, back now to the biggest diplomatic event, of course, taking place in mainland China this year. The China-Africa Cooperation Forum is underway at the capital, and Stephen Engel, our chief North Asia correspondent, is there for us on the ground. Steve, take us through what's been happening so far.
Well, it really kicks off this evening with a big gala dinner at the Great Hall of the People, where Xi Jinping will celebrate the visiting African leaders from South Africa, as well as Kenya, Nigeria, Ghana, and others. Of course, as we're now at the 9th FOCAC, which is the Forum of Africa, or China and Africa Cooperation. It's been in place since 2000, and over the years, culminating in 2016, we saw as much as $28.8 billion worth of aid, mostly in loans for infrastructure projects and power plants and roads and railways, and a lot of influence. $28.8 billion in bank loans from policy banks like China Development Bank, the Export-Import Bank of China. But what we've also seen, though, is a rise in defaults in some African nations. 3 nations, including Zambia, Ghana, and Ethiopia, have all defaulted, as of obviously some of these projects maybe were too big and overextended, and at least 12 or more than 12 other African nations are at high risk for debt distress. So it's the issues that are going to be discussed here as this forum begins in earnest tomorrow, as new deals get proposed, and perhaps they're going to be scaled down a little bit as China also tightens its belt with a slowing economy and wants a little bit more transparency and accountability on some of these large infrastructure projects and lending. To talk more about the Africa and China relationship, let's bring in our next guest, John Steenhuisen. He is the Agricultural Minister of South Africa. He joins us by video link. He was supposed to be here at the conference center, but that Beijing traffic got in the way. John, great to see you, and thanks for joining us, not in person, but just down the road, obviously. So your president met with Xi Jinping on Monday, I believe, earlier this week, talking about the trade relationship, no doubt, also concerned about the trade deficit with China. How do you, as the agricultural minister, plan to sell more to China and reduce that deficit?
Well, obviously, we are focusing on making sure that we build strong relationships with China, and that at a technical level, our agricultural products are able to meet the phytosanitary and biosecurity requirements of China, but obviously looking to expand the basket of goods that we are providing to the Chinese market. Currently, we have a large citrus export, a beef export, and we're obviously wanting to add a number of other producers to that. And using the course of the next few days to be able to build those relationships and expand on those opportunities.
Now, what indications are you getting from your discussions with your counterpart? And overall, as China's economy obviously is slowing, they would like to export their way sort of out of this downturn because the property market is still suffering quite a bit. Now, that's going to likely exacerbate the trade deficit with countries like South Africa. I mean, how many more, tea and wine and soybeans and soon avocados can you sell to reduce that? So do you not fear that the trade deficit, as China exports more of its excess capacity in industrial products, will exacerbate that problem?
Well, obviously, it's a balancing act, and that's what the talks over the next few days are going to be resolving. The number of other ministers have joined us here representing the government of national unity in Beijing, China, from our trade and industry and competition department, looking at how we can make sure there's a fine balancing act. South Africa has a huge unemployment problem. It has slow economic growth, and obviously we want to do whatever we can to stimulate that. Obviously, you want to protect local manufacturing from crowding out by exports, and I think it's a balancing act. It's about finding compromise on what we can bring in and what we can export, and trying to find that fine balance there, so that you don't end up damaging local industry through imports, but you also are able to maximize the ability to export to markets like China. I mean, huge opportunities for South African agricultural products, particularly.
Now, for our viewers who might not know, you have joined the coalition government. You were the head of the opposition Democratic Alliance in South Africa. June 1st, you joined the cabinet, essentially, of the South African Unity as the agricultural minister. How do you see that working now? We're several months in. And does it at all change how you negotiate trade deals or exports and imports with China?
No, not at all. It's going incredibly well. I think that the government of national unity has hit the ground running. This is the first outing of the government of national unity at a state level. President Ramaphosa has led this delegation to Beijing and China because it is such an important player for South Africa. I don't think that there's going to be much policy change, and the South African government subscribes to the One China policy. And we look forward to using this relationship in a strategic way to benefit South Africa, but also to make sure there's access to markets. There's huge opportunities as well in discussions with our Chinese counterparts on knowledge sharing, on particularly when it comes to plant health and animal health, vaccinology, and new technologies in agriculture that leads to greater outputs and greater yields. And I think this cooperation at a strategic level is very important. So China remains a very important ally of South Africa. We are part of the BRICS organization, and being part of BRICS and the elevation of our relationship with China offers, I think, South Africa a unique opportunity to position itself as the gateway to Africa, and using the strategic and leveraging the strategic relationship to our benefit, both not only for South Africa, but also for the continent.
Hey, John, have you had to temper maybe some of your comments that you've made when you were the opposition party head? I think you referred to some of the debt issues with African nations as an enchanting debt trap. Have you had to sort of temper those kind of comments as you're trying to obviously build trade with China?
Well, of course. I mean, you've got to realize that there's an election and there's a campaign. But when the election's over and the result is out and the people have decided on the way they wish the country to proceed, you've got to get on and do the work. And the reality is there's a huge mountain that faces South Africa. We have a low growth, high debt, high unemployment crisis in South Africa. And the only way we're going to get out of it is through economic growth, rapid economic growth, and rapid economic growth that provides employment for the 42% of South Africans who do not have work. Now, the only way we can stimulate that on the agricultural side is finding new markets for South African agricultural products. When you stimulate the demand internationally, you create jobs at home to meet that demand. And so, as one of the imperatives, as President Ramaphosa has set out very clearly to all cabinet ministers, is that we have to create jobs, we have to grow the economy, and we have to fight poverty. And we've got to use and leverage the portfolios that we have and the strategic partnerships that we can build both locally and abroad to be able to meet those objectives. We have to get the South African economy growing. We have to get out of a high debt, low growth situation, and we have to beat poverty in the country. And the only way we're going to do that is by expanding our economy, and the only way you can do that is by attracting foreign direct investment and an ability to be able to sell South African products abroad.
Now, Minister, I know South Africa is not in the same situation debt-wise to China as Ghana, as Zambia, as Ethiopia, but is it a risk, as we've seen over the last 3 years, to be too closely tied to China and rely on China for that kind of investment and loans?
Well, I think that it's no more risky than any other loan situations that you expose yourself to as a country. As I said, we have a strategic partnership with China through BRICS, and I think that puts us in a unique position to some of the other countries that you have referred to. Obviously, it's an important thing to watch. You need to be mindful of the fact that you don't end up too far in debt. But I certainly think that if one looks at the swings and roundabouts in South Africa, I think we're doing incredibly well so far out of the relationship. And I think that we are getting a lot more out of the relationship than losing. And I think as long as you maintain that balance and that you make sure that you are ensuring your national interest is never compromised, that trade is healthy and relationships with other countries, particularly countries that have huge markets that you want to access, must remain on a healthy footing.
South African Agricultural Minister John Steenhuisen, thank you so much for making the effort to join us by Zoom link. Next time, let's do it face to face. Best of luck to you and your entourage here in China. David, I'm going to send it back to you.
Yeah, Steve, thank you so much. And I was just watching that interview, fantastic conversation there with Steve, of course, and his guest there, the South African Agriculture Minister. Right, just ahead here in shows, we'll get you guys an update of these markets, and as we were pointing out, we're ever so slightly coming up lows of the day. We'll see where we go from here. This is Bloomberg. All right, the only story in town today, you're probably wondering where we're trading here in Nvidia. So the trading range in the last month or so has been from 90 intraday low during the malaise about a month back to about 131. We're at about the midpoint in the after-hours session here, about 105. Where does this leave valuations? And I'll leave you with this as we wrap up, of course, the China show today. The premium over the S&P is now the narrowest since the start of the year. So do you buy this dip or do you wait it out? That's it from us. Plenty more ahead, though, here on Bloomberg TV.